What's up, you guys? It's your man Henry, and today we're talking about NIO stock and doing a full analysis. It's been going sideways for the past week and a half now, but I see some options activity and charting patterns that I really want to share with my YouTube family. It has been so good to our YouTube family since I recommended it back when it was $11 per share, but of course we want to know what will happen next, and in this video I will cover just that. I want to start off by showing you guys a chart. The dark blue is NIO and the light blue is Tesla. This chart is important and is part of the reason NIO has had a slight pullback during the week. Notice here, they seem to be moving together more or less. This is called correlation. Correlation just means two things are associated and move together to a certain degree. I would say NIO and Tesla have a strong correlation, and Tesla actually dragged NIO down this week. NIO didn't report any bad news, but when a sector falls, stocks associated in that sector fall together. I'll discuss later in this video what that means along with the options activity, but I'll first like to discuss some research I have done and a new analyst opinion from Deutsche Bank. NIO had a $1.5 billion stock offering, and that got some attention from a few analysts, specifically Edison Yu, who slapped on a $24 price target and a buy rating on NIO. As I mentioned in this last video on NIO, they are diluting investors by raising extra capital. This is necessary for the business, and I am glad to see an analyst upgrade their rating and price because in my opinion, this is a very good sign of strength. The analyst sees NIO as a leader of an emerging class of China-based automakers backed by large, well-capitalized technology giants and local governments such as China, which he refers to the Fab Four: NIO, XPeng, Li Auto, and WM Motors. He said that he believes all four can coexist with the US-based rival Tesla, as there is plenty of room to capture market share away from the traditional internal combustion engines, or ICE for short. Guys, this is exactly what I was saying. Imagine we're a pack of wolves that just took down a full elephant. Does it matter if two lions join us for the feast? As long as those lions don't kill us, there is plenty of food to eat. I love animals, but do you guys see where I'm going here? The market is expanding very quickly, which is why so much competition is coming up right now. I've talked to some business leaders as well as high-level professors that have taught at levels such as MBA courses and executive management courses, and they have all told me the same thing, which is competition is a very healthy thing for a good market. If there is no competition, that's likely a sign of a weak market rather than people just being silly and sleeping on an opportunity. So I am agreeing with the analysts, which is rare because I've had many disagreements and different opinions from the Goldman Sachs analysts. I'm going to give this stock a price target of $25 per share in about 12 months, and I'm going to explain exactly why I feel that way, followed by charts and options backing up my opinion. Guys, we got a situation, and you know what that is, but as that situation that improves over time, China is specifically going to be improving much better than the US situation, and that's a very good thing for NIO stock. China is ahead of the curve with their economy, and that means that they're going to be booming very quickly and picking up pace at an accelerated rate. We know that because satellites are already showing increased air pollution in China, unfortunately, but that actually means a good thing for their businesses because obviously pollution is from their businesses coming back. Now with the extra income, not that the Chinese weren't already wealthy enough, but the extra disposable income that they're about to have is very important. The Chinese consumer loves to show off, and a luxury vehicle is practically a necessity to the society as a symbol of wealth. I think NIO is capitalizing so well on that opportunity because they're increasing their sales and they're taking advantage of the consumer demand. I personally think NIO is going to skyrocket in terms of its sales, and dramatically towards the end of the year, they're going to increase their sales and production as well as the first quarter of 2021. The risk I do see is Tesla, but again, I think the pie is so large. I mean, it's literally like, instead of having a pie this big, I think it's like that big. Jokes, obviously, it's like huge. It's probably billions and billions of dollars. And that's a good thing because Tesla, NIO, XPeng Motors, and all of these other electric car makers, especially in the China market, are going to have plenty of market share to accommodate for them and their growth going into the future. Now that you have some more background, let's jump into my screen and discuss the charts in more detail, followed by the options activity and what I see going on in the options market, specifically the call volume. All right, you guys, we're jumping into NIO stock and we're going to be looking at the chart and comparing it to Tesla. So this is something that I'm going to be doing because it's very interesting and I want to give you guys the concept of correlation. So what correlation means, and if you notice right here what's going on, as NIO goes up, and NIO is a dark blue, it goes up similar to Tesla, which is the light blue. And as you can see here, it almost seems like they're moving in tandem or somewhat similar. Aside from this little bump here, it really is correlated. And what correlation means, again, is that they move together. And why is that important, Henry? Well, the reason that it's important is sometimes you can make better decisions by looking at the competitors. In the example of NIO, when you look at competitors such as Tesla, and Tesla reports bad news, or Tesla has bad sales reports, you can bet that you can make a better decision on NIO based on what Tesla is reporting. Now, taking a look at correlation, the stock says 0.6. So if Tesla went up $1, what that would mean for NIO is it would go up about half of that, or a little bit more than half of that. And if Tesla went down about $1, you can bet that NIO is going to be about half of that as well. And I'm not saying it's going to be exactly half, it just moves. It just has a relationship. It's not an exact relationship. A correlation just gives you a general sense of what could happen. Again, now guys, what is really important about NIO and why I'm looking at the correlation is because looking at Tesla stock, this can give you a better sense of where NIO might be going, especially if Tesla is reporting good general economics, then you can expect good general economics for NIO. And if Tesla is having issues in China, well, that's obviously clear that NIO will have issues. So I do base my news and my research based on relative valuation. And what that means is I'm not looking at fundamentals all the time. I'm looking at, relatively speaking, what is one stock doing relative to another. And in the case of NIO and Tesla, they are both very good comparisons, and you can see that because it's 0.6. Now, I bet you if I got rid of Tesla and I put like Ford, I bet it won't be as high. Ford. Yeah. Oh, and that makes so much sense. It's actually negative correlation because, why? As NIO does better, Ford does worse, because NIO is an electric car maker, whereas Ford is the old internal combustion engine, vehicle maker. They're doing the complete opposite of what NIO is doing. So this is such a perfect example, guys. This actually shows you how different companies that do opposites, their price for their stock will do the opposite. All right, now we're going to move over to the options, and the options have been pretty hot at the money, so it's a lot of volume, to be honest. Like, seriously, this is in 7 days from now, at least from when I'm recording this video, but on Monday, it is still going to be about the same as this price is right now at $68 worth of premium on $18. I mean, that's massive. That's so 18 times 4 is about 72. So this is about 4% in 1 week. That's a really big volatility, and there's a lot of volume. But now what I actually want to do is I'm actually going to go over to January options. And the reason I'm doing this is because, guys, I'm not a short-term trader. I don't buy and sell stocks short-term. It doesn't make sense to me. And if you think that you can beat, the computer algorithms that you're playing with, yeah, no. I went to college for this. I went to finance school, and it's very difficult. I'm not going to try to beat the short-term traders, but I will try to invest in phenomenal companies long-term and tell you guys on what those companies are, as well as I trade options, which are very different. That's for a whole different time on why options are better than stocks and how I trade them, which makes them safer. If you want to have that information, I have a free link in my description where I'm creating the options course, which will cost money, but for now, you can just sign up for free updates. Anyways, I want to look at the options for January 15th because NIO has earnings on January 4th, and that's going to be a very important date, especially because that is going to account for all the sales that have come in basically from now and through November and December time. So looking at January 15th, I want to look at the options, and wow, they're super expensive. They're like stupid money to be made in the options market. And let's specifically go to the 20s. I'm going to go look at the 20 strike. What that means is people are betting on the 20 level. And wow, the open interest is massive and the volume isn't so big, but that's okay. That's to be expected because this is not a close date. I mean, this is in January. This is that 3 months? No, it's 4 months actually, right? It is 4 months. Yeah, it's 4 months. So obviously this is actually quite a bit. This is very significant volume for something being traded 4 months out. And this is very bullish for me because the volatility is high, which is fantastic for the options. Open interest is massive. Volume is healthy. And oh my goodness, the delta is high. This is basically saying that NIO has a 56% chance because, again, guys, I don't know if I said this, but a delta is the chance that the option will go there, or it's the probability that the stock will actually go to that price. And here we see that 0.56, there's a 56% chance that NIO will be about $20. So basically I see, you know, what kind of upside is that? That's like over 20% upside. I do think it'll be about $20 per share. And I think I said earlier in this video, my price target's about 25 per share. Now that's not going to happen by January. It could, but I'm going for 12 months out, which to be honest is absolutely insane. Like, that's stupid money. That's a lot. Not to mention the premium is high. Now I'm not saying to buy it. That's not what I'm saying. I personally don't buy options. You guys should know that if you follow my channel. I do not buy options. What I would do here personally is I would buy the stock right now. I would get it 100 shares, let's say, because you need 100 shares to trade options. And then I would trade a 20 call option and I would sell it, meaning I would collect this money. Now, I already have NIO positions open. I also plan on doing that in the ArcH portfolio, where you guys can follow on Patreon. I do want to close actually Patreon subscriptions for the rest of this month, starting on the 15th. I want to experiment with that. And I want to focus on who's already there. So do sign up if you do want to get more information on trading options in my ArcH portfolio. And basically what I'm going to be doing is I'm going to be buying NIO there. So I'm not going to be trading this option right now. I don't want to, but you guys get the point. Essentially, you know, you would buy 100 shares and you would sell 120 strike call option and you would collect $388 right this second. You would literally make that right now. And if you actually factor that in as a percentage, you would take 388 as a percentage of your buying price, which is 1,700. And if you calculate that, I know on the top of my head that 20% of 17 is about 34. So you can literally collect more than 20% premium. Literally, you're collecting 20% of premium into your pocket right now. So I just put in 20% in your pocket basically, but only if you like NIO. If you don't like this stock, you don't believe in it, do not do this. It doesn't make any sense. Only do this if you already like NIO and you want to collect some money up front and, you know, make some extra income. Basically, that's what I teach, making income. That's what I'm all about. Hopefully that's helpful. I'm going through my whole thought process here, just being fully transparent and honest with how I think about things, because I'm very different. I don't buy options. I don't do the typical things that most people do, such as dividend investing or buying options. I'm very different, and I have a very different experience from, you know, what I learned on Wall Street and what I do personally for my portfolio. And I'm telling you guys what I personally do, which is very different from all the other advice you probably get out there. Looking at the 25 strike price, there's not much volume. What that is telling me is obviously this is more aggressive. People are not going for the 25 strike price as much as they are for the 20. Now, the open interest is pretty healthy, but I think the last one was 30,000. Now the open interest is 12,000. So there's less interest, and the probability is 43% rather than the 56%. But the premium is stupid high still because implied volatility is so high. Now, I'm going to explain a lot more of this in the future, but basically, you know, the more implied volatility there is, the higher delta is. The higher delta there is, the higher the premium is. This is all linked. Options, they're all linked together. All of these statistics right here are linked. But you don't have to be an expert. I'm just telling you, I'm bullish, and 20 strike price looks attractive to me for selling the option, or you don't have to play with options. I'm just saying that the stock could go past 20. You absolutely do not need to play with options to make money in the stock market, obviously. So looking at the 20, we can go past there. 25 is my price target, but not for January 15. You know, I can go to January 2022, but I don't want to make this video too long. If you appreciate the full analysis, the deep dive that I did, all the honesty that I have and transparency, do let me know. I'll make more videos like this, and let's continue on with the video. All right, guys, I hope that was very helpful. You see why I am bullish on this stock, and I agree with the analyst. Being honest with you guys, this stock doesn't trade on fundamentals at all because it's more of a cult stock and has people hoping that it'll become the next Tesla. I'm very optimistic on this stock, but I am not saying that it's going to become the next Tesla. However, I see so much upwards action in the near future and following the next few months especially. Now, the smartest thing that you can do is A, do your research alongside my channel, and B, invest consistent amounts into strong long-term stocks such as Tesla and NIO, as well as the other stocks that I may be covering on this channel. And I have already covered so many positive stocks, especially value stocks, which are very important, especially in an upwards trending market, because a lot of stocks are unfortunately becoming expensive. And if you want to protect your portfolio against the downside, you need both value and growth. I started the ARKH portfolio and I am up over 8% just this week. And guess what, guys? Do you think I rushed or panicked earlier this week during the whole market sell-off? No, I bought Tesla for $360. I bought Apple, Slack, PayPal, Nvidia, and more. Despite the S&P 500 being down, I've actually managed to scoop these stocks up for a very good deal, and I'm up 8.5% on the week so far. If you want to follow me over there on Patreon and get those live alerts, the link is in the description. I hope this analysis was very helpful and puts you guys in a longer term mindset when it comes to investing. Because trading is cool, but I'm an investor and I am not a full-time trader. And I'm teaching you guys how to do the same by building your wealth and investing for the long term. Feel free to sign up for the future options trading course I am working on. There's a link where you throw in your email and I will give you guys some updates, maybe some goodies and free stuff going into the future. But for now, I am working very hard on that. I'll probably send you guys more updates, especially because I'm building a website, which is going to take 3 to 4 weeks. I spent a ton of money on that. So hopefully that will be built out in the future month. And I will also have more updates on the options trading course. Let me know what you guys want me to analyze next. I'm thinking about doing a video on Virgin Galactic because it's been some time and I want to do an analysis on the trends in that stock and also my price target there for Sunday. But if you have other ideas, please do let me know because I'm always happy to make you guys happy. All right, I love you all. If you made it this far in the video, you're the real MVP. You'll just have to do one thing for Uncle Henry, and that is a very important thing. Aside from liking the smash button, you know what that one thing is, right? Be aggressive in learning, but be safe in investing.